Good morning, 4:51. Time for a look at the markets now with TJM Investments, Scott Shellady. Good morning, Scott.
Good morning.
And hey, you're getting some rain down there. Is it widespread rain there in Illinois?
Yeah, it is. The news has just told us that we better get an early start to work today. We've got good coverage, medium to actually heavy, and it's going to be going throughout the area all day today.
All right, inconvenience for planting. I know farmers made excellent progress there last week.
Yeah, well, I mean, it'll be a little bit, but nobody is surprised by it, I think. And I think a lot of work got done over the last 3 or 4 days in anticipation of another 3 or 4 day wet stretch here. But if it dries out after that, I think we'll be just fine.
Excellent. Soybean futures yesterday, double-digit gains, recovered everything they lost on Friday. Other than that, it was kind of a disappointing Monday in the markets yesterday.
You know, it was a May Day holiday in Europe, so we had a lot of our customers out as well. Number two is we saw the bean oil market rally pretty strongly, and we were trying to find an excuse for the recovery in beans. And other than following the bean oil market higher, we also heard some stories about some stimulus packages to help spur on the Chinese economy that a few folks thought we might bring in some demand for beans. So that kind of did the rounds as well. So those two things kind of helped propel things higher. We still can't find a buyer for wheat and corn, though.
Wow, all right. Well, this morning, where do we start the day at?
Yeah, we got wheat and corn about 3 to 4 cents lower each, and beans are unchanged. So again, can't really catch this falling knife yet in that wheat market. We need to find some support. You know, it was kind of funny last week and the month, that big short position we've got with the hedge funds, we thought we'd see them come in and cover. And when they didn't come in to take some money off the table, that kind of gave some people some more energy to sell short this market. So down we go.
All right. What is the best insurance for minimizing the losses here during this production season for farmers?
Well, you know, I mean, we need to be taking a look at those puts just to cover ourselves and make sure that we're short the market when we do get to some levels down there. But I mean, we're going to get one more scare, I'm sure. We always do every year. When that happens in corn and beans, it's time to look at buying some puts, because that'll be the time to put it on.
On a few of those rallies, huh?
Yes, exactly right. Because you know, we don't go through a year with Mother Nature being absolutely perfect. We'll have a couple of scares here, and you take advantage of them.
Right. Yeah, and the talk is dry. So, all right, jumping over to the cattle futures, where do you see that happening?
Well, you know, those things look constructive. I just took a look at the charts again this morning here, and off of our late February lows, you can draw some pretty good support lines in both feeder and live cattle, and both of them look pretty constructive. So I think, you know, with the drought that we've got happening in California, and with cattle being the fourth largest thing that they produce, agriculturally speaking, in California, there's going to be some things out there that kind of give some support, as well as both demand with Memorial Day coming up. So I think that those things look pretty safe here for long positions in the short term.
All right, good reason for cattle producers to continue to celebrate. Scott,
right.
Thank you so much. Have a great week.
All right, good luck to you. See you.
Thank you. All right, 4:54 coming up next, a check of the forecast and a preview of what's coming up next on the Valley Today.